A $40,000 account. Gone in 6 weeks. And here's the strange part. Every trade idea he had was correct. He didn't lose because he was wrong. He lost because he kept piling in to prove he was right. What's interesting, there's a poker rule, a guideline players use to protect their money that would have stopped him cold. Why do some people seem to breeze through exams while others struggle despite knowing the material? Picture a student sitting down at their desk with a test paper in front of them. They've studied hard, but their preparation is different. They didn't just memorize facts, they anticipated the tricky parts, the pitfalls where most students trip up. This student used a methodical approach to think ahead, just like a pro athlete visualizing every move before the game even starts. They didn't focus solely on what they knew. They considered the areas where they might falter. They identified potential mistakes in their practice runs and rehearsed how to handle them. By the time the exam arrived, they weren't just prepared for the questions they expected, they were ready for the surprises too. In trading, thinking ahead is equally critical. Just like that diligent student, traders can anticipate obstacles before they even click the buy or sell button. This isn't about predicting the market's exact movements. No one can do that with certainty. Instead, it's about recognizing the signs of a bad setup, much like spotting a trick question on an exam. The pros do this by mentally rehearsing the trade. They ask themselves, what if this goes against me? Which part of my analysis might be wrong? Is there a level at which I'd cut my losses? This process is akin to marking potential pitfalls on a test paper. It's about being proactive rather than reactive. So why does this matter? Because it helps you dodge the common trap of emotional trading, where decisions are driven by fear or ego rather than a clear plan. By identifying potential downfalls ahead of time, you're equipping yourself to handle them rationally when they arise. Thinking ahead isn't just about avoiding losses, it's about trading with confidence, grounded in a well-thought-out plan. And here's where the concept of a premortem checklist comes into play, which we'll explore further. It's a tool that brings this proactive mindset into every trade, helping you to think like a pro. Your phone buzzes with a notification. It's 10:30 a.m. and you're about to take a trade. The market's moving, your heart races, and the opportunity seems ripe. But before you click that button, there's one critical step you can't skip, your premortem checklist. Imagine a pilot readying for takeoff. No matter how many times they've done it, they run through every checklist without fail. The stakes are high, and your trading should be no different. This checklist isn't just a formality, it's your lifeline. It helps you spot potential pitfalls before you commit your capital, your trading or investing money. Start by asking, what's my exit plan if this trade goes wrong? You need a specific stop loss, a preset price where you automatically get out of a losing trade. Without it, you're flying blind. Next, consider your position size, how much money you put into any single trade. Too big, and a small loss could wipe out your account. Too small, and you're not taking full advantage of your edge, a small statistical advantage that pays out over time. Now evaluate your thesis, your specific reason for taking the trade. Is it grounded in reality, or are you chasing the market? If your reason feels shaky, it's time to pause. Finally, check your conviction, how strongly you believe your trade reasoning is right. Confidence is key, but overconfidence is a trap. With these factors clear, you transform a potential emotional trading, making trades driven by fear, excitement, or ego, not a plan, moment, into a deliberate decision. The discipline to pause and review gives you clarity and confidence to proceed with purpose. So next time the alert pings, take a breath, reach for your checklist, and ensure every trade aligns with your plan. This routine doesn't just prevent losses, it builds the foundation for consistent, strategic success. Ready to see it in action? Let's apply it to a real-world scenario next. Still with me? Here's the part that breaks most traders. It's the difference between being reactive and being proactive. Here's what unfolds. You're watching a chaotic chart on the left. Lines zigzag wildly. Red candles stack up like ominous dominoes. It's like solving a jigsaw puzzle inside a tornado. This is the world of a reactive trader, constantly chasing the market, reacting to every tick like it's the final call. Now look at the chart on the right. It's calm. The lines are steady. The patterns are clear. This is the proactive trader's chart. Someone who already mapped out the pitfalls and has a plan ready. They act on informed decisions, not impulse. Reactive traders live in constant stress. They trade based on what's happening right now, driven by FOMO, fear of missing out, or panic when the market shifts. Their decisions are impulsive. The result? A scramble of buys and sells that feels more like flailing than a real strategy. Proactive traders have a framework. They've done the work before the market even opens. They use tools like a premortem checklist to spot risks before entering a position, a trade you currently hold. They ask, what will I do if this doesn't go as planned? And what signals confirm this trade is worth taking? This doesn't mean proactive traders avoid losses. They're prepared for them. They know not every trade wins, but by planning their moves and sticking to a process, they limit the damage and protect their capital, your trading or investing money. So which chart would you rather trade with? The chaos of constant reaction or the steady confidence of being proactive? The choice may seem simple, but making the shift takes discipline and preparation. What's interesting, it's not just about avoiding losses, it's about building a foundation that supports your long-term growth as a trader. Curious how this plays out in real life? Let's break it down with a real trade analysis in our next segment. It's the same edge a poker player has at the table. The discipline to fold a tempting hand when the numbers turn, and the nerve not to tilt after one bad beat. Watch what happens when you're at your desk with a stack of trade logs in front of you. Each one is a decision you made. Some worked, others didn't. Today we're getting into one trade that went south. This isn't about pointing fingers. It's about how a premortem checklist could have flipped the outcome before you clicked buy. Say you were eyeing a tech stock that had climbed steadily for weeks. The forums were buzzing, the chart looked tempting. You went long, bet the price would keep rising, expecting the rally to continue. Within days the stock nosedived. Your position got wiped out. What went wrong? First, the checklist. One key question, is this trade backed by real news or am I chasing hype? A quick search would have shown the earnings report was due soon and analysts were split. This was FOMO, fear of missing out, clouding your judgment. Next question, what's my exit plan if this goes bad? You had a mental stop loss, a price where you'd sell to cap your loss, but never defined it clearly. So emotion took over. You hesitated when prices dropped. You hoped for a rebound that never came. This is why predefined stop losses matter. Another point, am I following my criteria or acting on impulse? A proper check would have shown the setup didn't meet your usual risk-reward ratio of at least 2:1, meaning risk $1 only if you stand to gain $2 or more. Look, reviewing the log, a premortem would have flagged these blind spots before the trade. Each question forces you to pause. That pause could have saved your capital for a better setup. This isn't just about avoiding losses, it's about building a habit of preparation that supports long-term growth. The checklist makes you slow down, reflect, make sure every trade fits your strategy. It pulls you away from emotional trading toward a more analytical approach. Using the premortem isn't about guaranteeing wins, nothing does that. It's about stacking the odds in your favor through discipline and patience. Next time you're about to enter a trade, pull out the checklist, ask the tough questions first. You'll spot bad trades before they happen, and if this sounds like a lot of work, think about the alternative. The cost of skipping it is usually higher. In trading as in poker, what matters isn't just what you win, it's what you avoid losing. Now, let's see what this checklist is formally called in our next segment. Let's get into a concept that can save you from trading disasters. It's called the premortem checklist. Consider this scenario. You're about to take a trade. The chart looks promising, but before you click the button, you pause. What if you could spot the problems before they happen? That's what the premortem does. You imagine your trade has already failed. Then you work backward to figure out what went wrong. This helps you catch issues you'd otherwise miss. Here's how it works. Before you enter a trade, ask 3 questions. First, what could go wrong with this setup? Think about market conditions and your own biases, the mental shortcuts that trick you into bad calls. Second, what signs would tell me this trade is failing? Look for early warnings in the price action or the news. Third, what will I do if things start going south? Have a clear exit plan ready. Add the premortem checklist to your routine, and you shift from reactive to proactive. You protect your capital, you also build real confidence. If this clicked for you, subscribe for more strategies like it. What's interesting, knowing what to avoid matters as much as knowing what to chase. Next, we'll look at why this proactive mindset shows up in every successful trader. Think about the last time you learned something that shifted how you see the world. That's what we're going for here. Subscribe, and you'll keep getting insights that sharpen your trading skills. The next video breaks down the mindset of a proactive trader, someone who acts before the market forces their hand. Why does it matter so much? You'll see. Join us. Let's work through the market together, step by step.